The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all. I hope you had a wonderful weekend. You had a little rain down here. Actually, a lot of rain. First time I've lost power in a couple of years down here on Saturday night, Sunday morning. And I guess we've finally made it to summer because it was hot and steamy Sunday morning. And, of course, had a good day at the dog park. El Diablo, the trading dog, was once again Sir Humps-a-Lot. We're going to have to get that little boy fixed. He has a one-track mind at the dog park, but, I guess he doesn't really understand the ramifications of not being a gentleman there. But we will have a good time today also. Always a great time had on the Power Trading Hour at your headquarters for technical trading and investing, TFNN.com. So what do we have today? If you kind of remember, it's time flies. It's been about 24 years ago this day was the crackdown at Tiananmen Square. Still a big deal in China, and 25 years later, I'd say things are better. Maybe that was the first step of them moving to a demand economy of what its inhabitants wanted, at least a little bit. Of course, I suspect with over 1.5 billion people, is it a billion or 1.5 billion? I don't know, a lot of people, that it's still probably not going to be the kind of freedom that we expect, where we have a lot of elbow room to stretch out across the country. But, what can you say? Things have gotten a little better. Maybe that was the start of it, and no one will forget the guy that was willing to stand in front of the tank, where we give it seems like we give our freedoms away every day. It's kind of amazing to see that kind of fortitude in a young gentleman, especially in a place where doing so will cost you your life. Here it's hard to get anybody excited about much, but we'll go on some other things. We've got a lot of market news, of course, over the weekend. Probably, first of all, a little bit of Apple news, since it is 10% of the S&P cash. And what do we have in it? It is all about the news, and it's off $3 today. But the trial is just getting started for their ebook price fixing, and why I suspect that they are incredibly guilty. Apparently the person that put this together was Steve Jobs, and he's no longer around, so it's awful hard to prove something of someone where, of course, they are no longer around. This is the last day of fund buying. We're seeing a lot of ups and downs in the marketplace. S&P has gone positive yet again, up about 2 points, 1632. A lot of volume so far, especially early in the day, 2.7 billion shares. So we'll have to see how today comes out, but we are starting to see volume accelerate as we go lower. Got to a low of 1622.72. I suspect that this will be the last day of fund buying, although theoretically it extends till tomorrow. I suspect we probably saw anybody that was going to buy or dump and get additional shares come in to the market this morning. I also suspect that we're going to see a lot of the margin money that has been in this market, especially for dividend-paying big-cap stocks. This may be the last hurrah with the Dow up sharply pretty much all day out here. It was up, it's up 77 points now. But they've been trying to push this up all day, and I suspect they're going to continue to hold this up as long as funds will be buying out here. I said in my newsletter this morning that I suspected by the end of the day we would be flat on the market. I continue to think that we're going to probably start heading down some more tomorrow if any kind of news comes out. Of course, you could almost say that we're on hold this week, waiting for jobs numbers on Friday, and I think everybody's going to be watching on that. But if you look at the other numbers, bonds, everything else, certainly looks like we're going to see the Fed start to tail its purchases coming in September, and everybody's already trying to take at least some risk off the table. Especially the big guys who had a lot of money to pump in this market that was almost free are going to be glad to take the 20% bounce. They were able to shove a lot of these companies up over the last, I guess since the first of the year. So Apple eBooks going to get kind of a black eye, I suspect, later in the week when some evidence actually comes out. They're going to look fairly bad. Of course, they came out and are pushing the Apple streaming service this morning to try to counteract some of that. They are still trying to get into the Pandora / Spotify market, and the question is whether or not they can be successful and whether or not they were able, according to the rumors, to sign a couple of big labels for their music. What does that actually do for them? A lot of those labels were really trying to hold the price up. If they gave Apple a lower number, that means that they're probably going to have to go back to Spotify and Pandora to actually get and give them the better prices also. See what Pandora is doing. I knew it was down sharply earlier this morning. Still off 10%. Let's take a quick look in this chart. Never thought much about this company. They had the bigger wagon theory forever. This thing had its shooting, I wouldn't even call it a shooting star, but of course a blow-off top would probably be accurate. And that was on May 24th. This thing blew through to the top, 30 million shares, came back and, of course, reversed fairly significantly, going to make a race pretty much to this $12 level. I like Spotify much better as a company. It is not public yet. And, of course, Apple getting into this space probably pushes off any potential IPO with Spotify. But Spotify, much a better product. I love music and listen to it generally during the day as I trade. And Spotify is, I just like getting a great playlist of people that like music that I like, and coming back and looking at it. But anyway, Pandora off 11% on this. I just never understood their business model, and that is if we just end up actually adding enough customers, we'll eventually make money. But that's not how it works. They have to pay for everything they play, so there's more customers, more money, and they still aren't making money. And I hate companies that haven't found a way to make money and they go public to use that money to eventually and think that they can make money. Just not a good business model out here. We've got a lot of stocks moving fairly briskly. Facebook is another one. I've said that this is an $8 stock on the evaluation, and pretty much thought that this thing is getting back into the high $17, low $18 range here fairly soon. We've got that $17.55 September 4th of last year low, 46 million shares. Really looks to me like we're going to see that tested fairly quickly. Probably in the next few weeks, I would suspect. This is at the place where this thing can break. We've got a high volume low from May 29th that we certainly need to go back through, but everything shows more and more as we go through the summer. This thing is going to continue to weaken. Not so bad as other stocks out here. Yelp, is that their symbol? YELP? also off, that's their fairly recent IPO. This thing's down. Volume is picking up today. It's actually not looking too bad here, WELP. They are down, saying that they would love to partner up with Facebook. And the problem with that is that no one can come in and buy them out if they've already got a bunch of deals with potential rivals like Facebook. So if you're Yahoo and thinking about buying somebody like Yelp, makes it awful difficult to come in and buy them. Of course, Yelp is the online service for complaining about your waiter and waitress and other retail establishments mostly, whether or not they put too much starch on your shirt. Just call it the female dog website is what I call it. So it's going to be one of those things where the whole issue is whether or not and how many people get sued over boisterous reviews on their website. A lot of people have already seen competitors go on and try to club them on Yelp anonymously, that's the rub: is can you be anonymous and still guarantee that it just isn't your competitor beating on you with phony reviews about your particular service, especially restaurants where this thing finds most of its money in California and New York. But down significantly, but actually this thing is probably going to come into some level of support. What else do we have going on in the marketplace? Tesla's off fairly strong. I've been warning about this one. TSLA, it's off about almost 7%. TSLA. No matter what these people, and they're out there pushing it again today. Currently, to justify a $90 stock price, they'd have to sell 200,000 cars. And of course, that would be great, except at 200,000, are they selling just in the 14 states they are now? Will they be allowed to sell into those states without local dealerships? The answer is no for at least 30 of them. They may have 10 more markets that they can weasel their way in sideways without a actual dealership and continue to sell online. But the whole issue there is whether they're going to be able to carry the margins that they have now. If you have to start building new facilities and manufacturing localities, soon they're going to be back and have the same kind of margins that GM, Ford, and the rest of the companies have. And when you get that, the company's at about a $25 stock. So the problem is they are about their sweet spot, the Goldilocks thing right now. Can't get any bigger without spending a lot of money. If they start spending money, of course, their margins are going to come down, and they're rapidly going to roll over. So just be very aware of this. It's, at this current rate, even with growth factored in, I'm looking at them at a sub-$30 stock. We will be back in just a minute.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as always, you can give me a call at 877-927-6648. I wanted to remind everybody this is the last day for fund buying. And we will be, or not last day for fund buying, but it's also the last day for Tiger Dollars. So we'll talk about that a little bit more. We've got Ron from Denver. How you doing today, Ron?
Hi, David. I wanted to thank you for your recommendation there on GameStop anyway, I bought. It puts on GameStop and made some good money. On your newsletter, you mentioned this Plessey, this private company, was going to come out with a very competitive wafer and put a herd on, eventually, on Cree and Universal Display. I just wondered if you look at a chart on Cree, does it look like it wants to correct a little bit?
This is a bigger long-term thing. When I talk about normally when I talk about things in the Tech Insider, they are things that are going to take a while to develop. Like when you said GameStop, it was, 4 or 6 weeks ago that we started talking about that. So it's one of these things. It's one of these things where you kind of want to tuck it away in the back of your mind and start waiting for the things to develop. But and Cree,
when they make the announcement and the public gets aware of it, then that's when the reaction happens.
You're close to that. But what you would like to see in a top in any of these, not a lot of volume down at Cree yet, is going to be at least some pressure from these companies. And, I went into Lowe's and Home Depot over the weekend to look at their fare. And, it's still, there was, I don't like to talk about everything is in the newsletter, but there was one big thing in the newsletter that we talked about that would really make the end of this change in LED lighting. And, of course, anybody that wants to can get a trial of the Tech Insider. Just go to the front page of the TFNN. But there's one more thing that we're not going to talk about on the show today for those people that do actually subscribe to the newsletter. But there's one other big factor in there, and that's basically that factor is why Cree and Panel are doing so well at the current time. But just in this one, this thing is still kind of in an up channel. What I would like to see in it, let's go back and look at a moving averages. You'd love for this thing, you'd love for this thing probably to spend a couple of days lower, pop back up, and get back up probably in the $62 range. Let me try one other thing here real quick. Displaced moving average. You really don't have a double repo on this thing, so you're probably actually even. Let's go back to the other one just quick. See if I can find just a traditional moving average. Yeah, it's in an uptrend, but you're probably looking for a retest of 64.32 on a lighter volume to pull the trigger on this thing. Maybe the whole market's just going to give it up, and you won't get another shot at it. But I'd still, especially as much of a Momo stock as this one is, you're not short now, right?
No, I did buy puts this morning. I'm sorry, I apologize. I did buy puts this morning, but I'm only looking for 58, 59.
You could certainly get that. I think that there's a better play. So you're in the money already, right?
No, not for the way I bought them.
Okay,
but I'm ahead.
It depends
on
when you bought them. Yeah.
I'm ahead, yes, sir. But
okay.
Not in the money on the stock.
To tell you the truth, I think we're going to know tomorrow as the end of fund buying ends up that we can't really get anything going here and had a lot of volume and a lot of strength in that volume as we went lower this morning. And it looks to me like this is just the end of fund buying. You could have it maybe the first couple hours tomorrow morning, but I suspect after that, if we can't rally during fund buying, this is going to be a really tough month in the market. So I think you're on the right side of this thing, and it may not, reading a chart may be second to actually having the market correct for you. But I think we're probably 4, 8, maybe even 12 weeks out from the reality of what I had in the newsletter coming to pass in Korean Panel. So, you have anything else you want to talk about?
Well, just a company with disruptive technology, and I don't know if this is the avenue to mention it, but a company called MediaShift. The symbol is Michael, Sam, Harry, Frank.
Okay. Well, I'll take a look at it. We'll be back after the break.
Okay.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're talking with Ron in Denver. How you doing now? You were looking at
it's a small company.
Go ahead.
Yes, but also a small company that's got disruptive technology. I thought you might want to take a look at it and maybe comment on it sometime in the future. It's called Media Shift, and it's M.A. Michael, Sam, Harry, Frank. And basically what they do is they take a company, airport or a hotel website and converts that website from a cost center to a profit center. As soon as all those ads on the right-hand side of their website, as soon as those ads hit their website, they automatically shift and become, owned by their last, what they call it, the last mile, and the hotel or the airports, they own those ads. And they get to keep the revenue instead of sending it to Google.
It's not a bad deal. Unfortunately, the company trades next to nothing in shares. So
yeah, they just merged, and now you're going to have they've got about 30 million shares. It's just there's no information yet around them. So
Yeah. So unfortunately, this is one. If you buy it, you've married it. There's no easy divorce to get in and out of this thing, because the first time it moves, it's going to be way up or way down, and that will be it. And of course, with trading 9,000 shares, one day you'll have 200,000 shares, and it'll be up $2 or down $2. But yeah, maybe as this thing moves along, maybe you'll actually have some trading in it and a real market in it. Unfortunately, fortunately, I really will not trade stocks that don't trade more than about 300,000 shares a day, at least on average. And that's just so you have a decent idea of what's really going in. And, of course, if you wanted to sell 2,000 to 5,000 shares on a 300,000 share day, you can probably do that. So,
sure, I understand.
You know, it's just this one would be scary for anybody to be in, just because there will be no in and out. There will only be out, probably, on something this incredibly thin. Anything else?
No, that's it. Thanks.
Okay. Well, good trading. Of course, he was one that shorted, what was it? GameStop, which is GME. That's had a nice little retrace out here. You may even get another shot at this thing at 36. I don't know if you've been thinking about that, but this nice move down. You got a high volume low out here. You've got 50% retracement would take you to $35.40. And if it's an ABC down, could more likely. I see where this thing's moving, but you could get possibly a. Let's take a quick look at this. A, B, C. So what is it? B, C. Do it right here. So it's retraced 40% so far. Looks to me like you're almost perfect to get into this gap down at 50%. So that would be fairly interesting. Anyway. Well, we'll talk a look. That one did come down on strong volume. We got a good target down here at $30.94, again at the lows. So what else do we have moving on for the day? And thank you for the call, Ron. And we've got a few things. Intel, huge move out here today. Analysts got on the right side of this one. And what do you have? A nice little kind of a hammer up here. But it looked to me like there were a lot of shorts in this, at least for Intel. And what we had is a nice little short squeeze on Intel today on a dubious market upgrade. Intel, great company. Everything that we're doing about, the reason that everybody popped this today, I wrote about in the September 28th copy last year about them getting into the whole tablet space and how they would be successful. Brought it back up on Friday as their chips actually are starting to hit the market. In fact, a lot of their processor chips also are hitting the market. Not bad. I still want to catch this thing on a retrace, but I think if the market continues as it is, probably won't take a lot for this thing to pull back some, but the sky's going to be pretty blue for Intel for a while out here, especially I suspect we're going to see PCs sales pick back up. People spending disposable money right now on tablets, that'll be hot, and then they'll be ready to get another new computer probably by this fall. But Intel, nice little bounce. It's going to probably be a light on volume. This thing gapped down on 86 million shares on September 7th last fall, and it's now just back into that. What do we have out here? 62 million. So we're probably going to be a little bit light out here today as we come back and are going up from some fairly significant, I suspect, resistance level on it. Of course, probably a lot bigger issue out here is the market as a whole. Again, not being able to rally any of the last couple of days during fund buying, normally a fairly good sign that weakness is coming. Again, normally on a day like today, we're already into the third day of the month. Funds have to be 100% invested. And what do we see? They really, it's got to be the last 3 days, trading days of the month, or first 2 trading days of the month. And it really looks to me like there just isn't a lot of, maybe there's a few people holding some powder dry for tomorrow morning. But normally that is fairly over fairly quickly on the second day of the beginning of the month. And, of course, we're, up 1 point on the S&P cash with 2.9 billion shares. So we have made it to a lower low. I'm suspecting that we're going to do that on higher volume by the end of the day. So other things going on in the marketplace. FFIV, another one. A lot of analyst calls today moving some of these technology stocks. And, of course, FFIV, this thing came down, went back up into a resistance level, got really trashed on April 5th out here, came down on a lot of volume, 12.5 million shares that day. It's been working its way back up into that. Been going sideways for a while, but 2.7 million shares on May 16th. You really just went sideways on very light volume. And, of course, pulled back today. But analysts call on it, which, you probably want to see if this thing could not make it back at the $70.60 level. Would certainly look a lot sweeter there if you could get it on very light volume and everybody kind of gets bored with it. I think we're on the way back to 1575, 1580 on the S&P cash, and I think a lot of these stocks will make it back down here. If we get that light volume, then maybe we are setting up for a mid-summer or even a fall rally on some of these tech stocks. Amazon's off a bit. Amazon, the IBM, I think, is trying to get the Justice Department after Amazon. And Amazon doesn't like, or IBM doesn't like Amazon coming in and I guess thinking they're poaching their territory, which is the federal government. They came in and way underbid IBM for cloud services for the FBI, CIA, and some of these other companies. So the big divisions of the U.S. government. And a little news out today that IBM is more than ready to dump a little salt into the wound of that and try to see if they can't get some of these deals renegotiated so that Amazon does not win them. Not a whole lot of volume back in Amazon. This thing, of course, continues to make lower highs and it did make a lower low on lighter on heavier volume back to the 245.75, which is the last major low on May 1st. SodaStream's another big one, continuing high volume moves on very high short interest. This thing is now finally back into a long-term gap. This thing is one of these where I think you've got a pretty good chance of catching this on a long-term high and maybe shorting this thing. Volume is a little bit better today. What we are looking at, though, is it coming back in to the huge gap down on it's about 17.5 million shares, and that was back from the August 11th day in 2011. So 17.5 million shares. We're coming back into that with 1.9 million shares so far. So I suspect we're getting pretty much at the end of the short squeeze on a lot of these individual stocks. And the ability to continue with 20-25% margins on SodaStream, I suspect may be a little difficult. You see a lot of ads now for coffee containers to go into these coffee machines at greatly reduced prices from then Green Mountain or Starbucks. Actually reusable little containers, and the question is just how long are people going to pay those coffee prices? Now, I'm not a coffee drinker, but maybe I'm underestimating this because of the almost coffee fix, monkey on your back behavior that I see with people that drink coffee regularly. fact, we've got one in the office in there that the guy's always brewing some coffee, and it's got like butter in it or something. I don't know, some buttery coffee thingy. Ugh. But I always loved the way coffee smelled. Just never really loved the way it tasted. Always kind of tasted like dirty water to me. But SodaStream really going to be interesting. A very light volume as this thing pushes back up. And been kind of the perennial short squeeze from about $50 and higher. Ford is flat today, even though it came out with good sales numbers. I think that kind of tells you a lot about maybe some of these stocks peaking out. Ford's number was up about 14%, but not a whole lot of movement. Probably somewhat market related, but at the same time, we've got a lot of these other car companies. Maybe these things have kind of run their course, but they're starting to act a little bit weak up here at these levels. Trip was another one of these moving vastly lower this morning on a downgrade. And, of course, a lot of these look like they had a good chance that they've run off their highs, at least for a little while. I would have liked to have seen a test of a high to start pulling the short squeeze or the short trigger on this. This one actually could go back and test the 65.41 again to prove that a top is in. But TripAdvisor, of course, the pretty much a Chinese Asian version of what we have over here. We looked at Amazon. The 3D printing companies also one too many Ds. Also one of these sectors that's really rolling off the top today. They had some very high volume that came in on a huge doji star on the 14th of May. Tried to kind of get back into it on Thursday and Friday last week, but about half the volume coming back down on heavy volume. Of course, one of the newer IPOs in this sector was X1. It's off on also heavy volume, talking about a bearish engulfing of a lot of the trading days. Certainly these stocks are seeing a little bit of the gas and steam roll out of them. But what can you say? Again, you can always give me a call at 877-927-6648. That's 877-927-6648. We'd love to have your phone call. Google, I wanted to take a look at that. They're trying to actually push Google up to 1,000 with all kinds of analysts calling for one more high in this thing. Probably the best run tech company at the moment. The easiest one to figure out what they're going to make money and how they're going to make money. Not a lot of secrets back in what they're doing. And, of course, Wall Street loves that. They think that they've got a pretty good beat on it, so they don't mind running the stock up fairly significantly. What do we get back here for a retracement so far? This, you probably would have a decent time if you did want to buy this thing somewhere between $811 and $822. You've got a nice little confluence pattern setting up from the last two major moves in this market, at least in Google. You got a nice one there, and price spread's about right, $10. So about $815, $820. Would be in there, and you just would not want to see this thing break 811 or lower. And let's see what else we can see. Now, we'll look at a few more stocks before the end of the day. Hope everybody had a wonderful weekend.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I suspect, what is it, tonight at 6 o'clock, the end of the Tiger Dollar promotion comes up, so that you want to get to that those Tiger Dollars right now. If you want any of the newsletters, the art of the charts, any of the other stuff that we do at TFNN, an easy way to make a quick 20% on your money and give some money to the First Boston Fund. Also get a 6-hour program from Tom O'Brien himself, especially the one on playing White Lightning. A lot of neat stuff out there happening, so make sure and get your Tiger Dollars now. and don't cry later. You can get them now. Got a question in the den about AZO. And I guess the question is, will it hit $400, the gap at $390? And, I suspect, we're going back to 1575. So I think you've got every belief that this thing could hit that 382 to 392 gap. There isn't a lot of energy there. And you're kind of getting into the danger zone right now against kind of a little doji from the 20th of May out here. But what you got? Strongest volume you had out here was 740,000 shares. I almost see this market ready to pull back, and of course, every time it does, we see more strength come out of these auto repair companies as people keep their cars longer and longer. I think a few of the things that we're going to see from the Fed and the pullback of this money. In fact, I think one of the reasons the Fed has decided to start trimming is that a lot of this money, in fact, we saw a report coming out today about how these second-tier mortgages that got us into such big problems already are coming back in the last couple of weeks, that we are seeing subprime mortgage loans. About 8 months ago, I was talking about subprime mortgages coming back in the auto industry. And I think there's a reason why, and that's the government's pushing them. Now, of course, they own a car company, or at least a big part of it. And I think that the huge move lately in housing was the same thing. We are starting to see subprime mortgages come back on the theory that the housing cannot go lower. And that the bottom is in, therefore we should make ridiculous 100% loans yet again. The thing that got us into the same trouble, kind of the hair of the dog. And I see that I think that we're probably seeing the best sales numbers that we're going to see in cars for a little while, also probably in housing. So in AutoZone, I could easily see this thing come back into that range. And on very light volume, this may get ready. It's got a lot of consolidation. It had one thing I didn't like is that it did break above that $400 range and really didn't have a huge volume day until, what was that, the 21st, which is the day it actually spiked and pretty much reversed course the next day. So you kind of a blow-off top in this thing. You could easily find this thing coming back, but I suspect that the new car sales have taken a little edge off these auto parts companies. I like to do my own maintenance on my vehicles. I wrenched all my motorcycles. Oh, by the way, make sure if you have a Velocity, the best racing ever is on the TV this week. It is the Isle of Man. If you want to see real men doing real racing on motorcycles at speeds approaching 200 miles an hour on country, cobbly roads through downtown, some of the best racing you will see ever on Velocity this week. I think it's every night at 10 o'clock, but take a look at that. And we'll see you tomorrow, same bat channel, same bat time. Check out those Tiger Dollars.